Hello everybody, I'm your boss, Joe Boston. Welcome to another trading stream. Thankfully, the geopolitical news, while still quite volatile, is coming down a bit today. Things are more or less going sideways, so I thought today we would do maybe an indicator focused stream today. I've started to see a lot more people starting to use Wayne's Pivots Pro here in the last few weeks. Maybe it's New Year's resolutions. People are starting to get into the indicators. People wanting to learn how to use the indicators going into the best period ahead of us here for trading. I thought I'd go ahead and cover it as the developer for Wayne's Pivots Pro. I'll go ahead and announce now there is an upgrade coming. And this upgrade will be free for everyone. It's going to be great once I have more information to tell you guys. But I thought I'd announce it now that there is a big upgrade coming to Wayne's Pivots Pro. A huge upgrade. Now, for most pivot point indicators, it's like, a new feature here and there. Like, no, we're talking a total rewrite. Total rewrite. So, where to begin with pivots? What I like to do when I teach people how to use pivots is I like to first go over like the whole history of pivots, how they kind of came to be, and maybe the calculations of it. Because when you first apply the indicator to your chart and you're looking at the pivot point biases, like the number one thing that everyone's on about when it comes down to trading pivots is, especially Wayne's Pivots, is what bias do I select? Of all these biases, which one do I select? And that is the hardest question. You're asked by the indicator to provide that on your end, to do that discretionarily, right? I'm going to say right now, a lot of people do not know how to set this correctly. And the reason why is because they need to be doing good trade research. So I'm going to tell you guys right now, every single person who buys Wayne's Pivots Pro automatically gets access to the Wayne's Pivots Pro role in the Plan the Profit Discord. And this is the Discord where a lot of trade research is being done. And there's a trade forum where all that research then hooks back into actual trade plans. This is actual geopolitical research because these things can impact fiscal policy for governments, and that fiscal policy can change how we evaluate whether an asset, especially for a lot of currencies, or if you're getting exposure to equities of a particular country, how those things can be impacted by the change in fiscal policy. Also, a change in government can mean a change in what the relationship is going to be with central banks, what the new government's relationship will be. So this stuff is critical to be watching and to stay on top of ahead of time. What I like to really explain, and how I'm going to tie this back to the pivots. When you go into this indicator and you look at this pivot bias setting, you have to have an expectation of what's going to happen next to discretionarily set this setting and to pick the correct one. Now I can show you like, okay, here's the range bullish setting, and it says to, buy down here and sell up here and put your stop loss right there. But obviously going into the beginning of Operation Epic Fury, this is not the right bias to have. This is not the right expectation to have if it's going to be a bullish continuation trade. And a bullish continuation trade, just before I even pull it up, it's going to have a buy zone right here between R0.5 and central pivot, and then the exit zone is going to be between R1.5 and R2. And continuation bullish. Right there. Right off the bat. There's your buy zone, and you had the bottom wick just right there in the entry spot right there. And then you would have exited somewhere around here. Done. Having the correct expectations allows you to set your bias in the indicator. Like, these things are really important to follow. And there are many, many, many geopolitically tradable events, but it requires you to follow them. And then that information informs your expectations on when new information comes down the pike. You can go ahead, set up an expectation, and then properly set your damn pivot bias, right? But it's a lot harder to do that on your own, or to know if you're doing adequate research, which is why I keep stressing, guys, hop into the research forum, help out with these threads, and communicate with the rest of the trading group here, because this is all free. There's a paid section, the Boss Trading Group, and that comes with not just Wayne's Pivots Pro, actually. It comes with probability pivot points. And this is the same thing as Wayne's Pivots Pro, but it includes seasonal data to give you seasonal odds of where the top or where the bottom is going to be for the month. Now, during major geopolitical risk events, when you're using seasonal data like this, because these odds come from seasonal data, you can actually run into a really big issue where a big geopolitical event like Operation Epic Fury begins, and you commit too heavily to making decisions based on seasonal expectations. Again, it's exactly the same issue as I pointed out with the guys who just use basic Wayne's Pivots Pro. When you go here and you set a bias before doing all the research, right? You're just picking any one of these things and then doing research, or not even doing much research at all, and then trying to trade just some random bias. It's really not going to work out. A lot of people do not do well with that approach. However, the same thing also applies to even people who have these statistically enhanced versions of the pivots. And this version of the indicator also has the biases. So if you did the exact same work that I just described in doing all that geopolitical research, like we did back when we were just going into Operation Epic Fury on the 27th, like we were following the entire buildup of the US military there. And I got some conflicting information about, oh, they're going to send Marco Rubio to Israel, but at the same time, they're pulling out every single U.S. diplomat. They're pulling out every single U.S. government official that they can out of the Middle East. But then at the same time, they want to send Marco Rubio in 3 or 4 days later. It just doesn't make that much sense to me. So there's a huge confliction. And it was like an hour or two later, I had that chat with Ari about like, hey, dude, this is looking like they're going to go in this weekend. I don't know about being short the dollar here. I changed my expectation because I was in line with the consensus like everyone else was. But when you have all this information and all this research coming through and you actually follow it, it's very easy to let yourself update your expectations and change. And it's even easier when you have other people who are also generating that same concern and who also have a good track record of doing good research on their own end. If you want to be able to set this setting here, or in Wayne's Pivots Pro, if you want to be able to set this setting competently, you need to be doing good research. And it's a lot easier to do it in the kind of structure that I have set up. This stuff exists and it's here to help you get better with setting better trading expectations to use these indicators. So looking at these odds, it's saying, hey, about, well, first we have to look at the low odds here, because I like to start with what are the odds of hitting the entry and what are the odds of hitting the stop loss for this particular bias. Right off the bat, using seasonal historical data, right? So if you're setting your expectation based off a geopolitical issue, then seasonal data is not going to be the right way to interpret things. It's just not, because these geopolitical tail risk exogenous shocks are do not behave seasonally. They very frequently will go wildly against seasonal trends, or really far extrapolated from whatever the current seasonal trend is, just coincidentally. So when things like Operation Epic Fury are occurring, you can't put your eggs all into the same basket of doing seasonal analysis. So I see a Herald mentioning CPI. In the last stream, I did mention that a lot of agricultural commodities are not doing so well because about a third of the world's fertilizer comes out of the Middle East. And the price of fertilizer went up some enormous amount. Urea prices are up 25%. So this is the prices we were at, like 460 going into the end of February. And then once we got into Operation Epic Fury, prices jumped 25% and we're now at 587 roughly for urea. This is going to, if this stays very, very high, this is going to make food prices higher and stickier higher. And that will seep into CPIs for Europe and for a lot of places. The United States, for a lot of places are going to see higher food inflation over the next few months. But yeah, I'm very actively watching commodities prices because I am definitely concerned with food inflation. Now, there's also issues with energy inflation, right? All the energy inflation that we, like, it's very, very obvious. I don't have to go too deep into it because everyone has been talking about it forever, right? But I'm going to bring this up because this is a huge, huge example of what I call indicator breakdown. When a geopolitical event becomes an exogenous shock and it goes outside of any reasonable expectation you can possibly set using the indicator, you have to stop using the indicator. That's the responsible thing to do. And that's coming from the guy who developed the damn indicator. This, though, was incredibly straightforward. This day and this day, that's a bullish continuation. This is actually a range-bound trade that's actually more short-biased. And that's a standard bullish bias. You just do standard bullish. And then that's how that fits. But then again, this is in retrospect, right? This is in hindsight. However, by this point in time, we would have been able to see, because this is now on March 3rd, the attack was here over the weekend. CL opened on March the 1st. So we absolutely would have known at this point, hey, risks are definitely abound for oil appreciation here. And just buying at the entry zone here actually kind of looks like the dream. The fact that it even went sideways here looks quite phenomenal. And look where the stop loss put you. That seems incredibly reasonable to put the stop loss right here, just below effectively the prior swing low of the prior day as well. Very reasonable in my view to have that as the stop. And also you can set alternative stops if you don't want to just use the pivot point stop. So if you want, you can actually go into the indicator settings. And instead of using a pivot stop, you can use an ATR stop if you want. And this will use an ATR look back of 10 with a multiplier of 2, and it will be volatility adjusted. So that's the oil gap. And you can see, compared to the pivot stop, the pivot stop is a bit higher, and the ATR stop is a bit lower. And in the new indicator, the stop loss setting here to switch between the different stops is actually going to be right here at the very top. So then you don't have to do all that extra scrolling. With the huge military buildup, the 85% meticulous odds, there's a huge amount of research we were doing. And once the attack actually happened, it's very clear to say, okay, time to have a bullish expectation on this. Time to go long the dollar. Time to do this. I've taken in all the information I need to autonomously make my own decision the way I want to make it. I know I didn't totally cover absolutely everything when it came down to the pivot points or even go into all the settings. But I know I covered the single most important thing. Because the one thing everyone has asked me, ever since I made Wayne's Pivots, the free version, ever since I built this version of the indicator, and in every other trading group that uses my pivots, I know for a fact the number one question is, how do I set this damn setting here? How do I set the pivot bias? What pivot bias do I pick? And that comes from setting good trading expectations, which come from doing good trade research, knowing how to interpret the research, knowing how to do the research, knowing who to collaborate with on it. And that's why I find it really important to stress to get into that Discord, contribute to those trade research forums. But here's one thing I absolutely will say from the research that I have done on pivots. A lot of people like to use the standard bullish and the standard bearish pivot biases. In most nominal trading situations for most trading days actually fall in between the range bullish and the range bearish bias. Most trading periods, the quote-unquote correct bias, the bias that technically has the highest profit factor, is going to be the bullish or the bearish range. This one, where price stays essentially between R1 and S1, daily pivots are a lot harder for people to get good at. I've seen people struggle so much with trading daily pivots because setting an expectation, a pivot bias, every single day is really ridiculous. It's really hard to do it. I don't even do it myself. There are some people who are really good at it, but I don't know. Those guys got like magic fingers, they're magic to me. Because that means they're setting really good expectations on the day-to-day. Discretionarily. I'm just saying it's a lot easier to set weekly expectations and monthly expectations and to use daily pivots to express and enter those rather than trying to set daily biases every single day. If you want to do trade plans for the week ahead here, well, you need to be doing research. If you want to set the expectation for the week ahead here, you can also use the probability pivots to try and do that. So next week, about 56% of lows occur between central pivot and S1, which makes me want to either take a standard bullish bias entry or a range bias entry if I'm more conservative. So this is what the range bias looks like, a bullish range. So it says 26% of the time next week we stop out, we hit the pivot stop. 13% of the time we hit a drawdown. 26% of the time we hit the entry, roughly around where the probability weighted pivot is for this bias. And then 30% of the time we actually hit the entry earlier between central pivot and S0.5. And then if we want to look at the odds of exiting, the odds of hitting our target, if we actually take this trade, it's actually saying 60% of the time next week you go past R1. So this actually would be really undershooting things. It'd be really undershooting things. One thing we can do is just turn on the strategy dashboard here. So I'm going to move myself over here because the strategy dashboard is about to pop up. Yep. So the strategy dashboard is, and it's already set up for standard and range bullish. Instead of having to go into the settings and look at the high and the low and the close data independently for all the probabilities, this will automatically give you those calculations and tell you like, hey, here are the odds for the current week right here in the top half of the table, and here are the odds for next week at the bottom half of the table for each pivot bias. And so what I like to do right off the bat is look at stop loss for, let's say, next week, right? So we're just looking at next week. Standard bullish hits its stop close to 40% of the time. Standard bearish hits its stop 60% of the time. Range bullish hits its stop 26% of the time, and range bearish hits its stop 39% of the time. So it seems like the odds are in favor seasonally for the standard bullish and the range bullish biases to not get stopped out versus the bearish versions of the same bias. I hope this was a nice little holistic breakdown and a nice thing to focus on. Arguably, again, what is the most important question that I always get asked about this indicator, and going over how to actually set this damn setting. It is so important to learn how to do this correctly. And in a situation like we were recently in, going into the beginning of the month with Operation Epic Fury, when to just totally ignore it. When to just totally put it down. Like, this is not helpful. This indicator is not helpful right here. But what is helpful is all the research in the Discord. Getting access to it when it's breaking and watching it develop. So I hope this was an entertaining stream. And I hope for all the people who have been getting Wayne's Pivots Pro that you consider also joining my trade group, as well as say in the trade groups of the mentors who you like. Thank you very much for watching, and I will see you guys in a bit, and hopefully, please, in the Discord. Alrighty, in a bit.